Hi, this is Stephen here from Share Navigator with a technical update on the S&P 500. So it's November the 3rd, it's US election day, and we're in the pre-market at the moment. So as you can see, the S&P 500 was up over 1% yesterday. So you might be wondering, why is that so? When you look at all the news on the coronavirus, the way it's growing exponentially across Europe and in the US. And then you also look at it, I suppose, with the US election, when you see news feeds of businesses boarding up their premises and afraid of potential riots after the election result, you'd be kind of wondering, why is the market so secure? And all I'd say to you there is that this could change in a heartbeat. Although in pre-market at the moment, stock futures are pointing to the market being up 1.5%. So all we can see is really that, the Democrats, or Joe Biden, still has a clear lead in the polls. They seem to have a lot more avenues to get to the 270 electoral votes that's required to win the presidency, whereas the odds of Donald Trump winning are still at about 10%. So I think all the stock market wants to see is a bit of certainty. And of course, if the Democrats can hold a majority in the Senate as well, which is a potential outcome, but it could be delayed further, the stimulus package that's going to come along with it, their stimulus package was a lot greater. And I think the market will start kind of zoning in and focusing on that stimulus package. So, bad news up all throughout this year. The market pretty much ignored it because of all the central bank stimulus. And of course, now we're looking at these fiscal stimulus packages coming from governments themselves. And the US Congress really couldn't agree on anything before the election. And now, with the election out of the way, I suppose investors are going to focus back in on what's that stimulus package going to look like. And that will be positive for stocks. So where could this market go? Well, looking at the technicals at the minute, it's still early days yet, even with the futures up 1.5% today. What I'd like to point out to you here is you have a lot of overhead resistance at these levels here. So you can see all these moving averages converging here at about 3375. So the market could rally all the way up to here, and you're kind of still in resistance territory. And you also have some classic support and resistance just about here as well. And that's kind of where the market is set to open, is up around here just at this moment in time. So there's still a lot of overhead resistance here in the short term. So even with a rally today, that could change in a heartbeat. So you've got your first resistance here, let's call it 3340. Then above that you're at 3370. And the good news though for bulls, if we break above these levels here, so if the market kind of gets up to this level here, breaks above that 20-day moving average at 341, again you're looking at these previous all-time highs being taken out, and that's a potential to happen after this election. On the flip side, if, let's say, we have a contestant election, there's no clear winner after tonight, and the next thing, this looks like it's going to drag on for weeks, and it's the same with the Congress, you could really look at these lows being taken out here very, very quickly, and then you're down to this 200-day moving average, and then potentially even lower there. So it's quite a kind of, even though markets look very safe and bullish and everything at the moment, which is quite good, it could change in a heartbeat. So what you need to know in terms of support and resistance, really your first level is 3340, then 3370, and then 3410. I think if we clear that hurdle here, I think we at least take out that high and possibly even that high again. On the flip side, if we start breaking down again, and we take out these lows here, I think the 200-day moving average is in play again. Just one other thing I wanted to bring to your attention is the money flow index down here, and I want to go back over a period of time. So if you look at here, the money flow index, this was the COVID sell-off. When it reaches these extreme sell-off areas, the market tends to rally. So you can see what happened, the corresponding move in the stock market after that. Then we had another kind of a sell-off here, and again, if we just match it up, you can see what happened after that. Then we had another one here, which matches up with this low here, and then we had a rally off that, and we've kind of hit that low again. So if you were basing your decisions on money flow, it's actually indicating that we might be getting near the end of this sell-off, or the recent sell-off. And that's why I've been saying that if the market did kind of get down into this level here, I will be a buyer of stocks, primarily because the stimulus package will come. It's just a matter of time. You've got central banks that are committed over the next 3 to 5 years to keeping interest rates low and providing that stimulus to the economy. And the earnings season to date has been very, very good. So companies are still generating significant profits in this difficult environment. So with all that in mind, I think stocks will be still very, very popular. And I think if we're lucky enough to see the market down around these levels, it's a buying opportunity. Okay, this is Stephen here from Share Navigator with a technical update on the S&P 500. Thanks and bye for now.